Awesome. Today is Friday, June 14th, 2024. And right now we're looking at gold. And we saw a big push up to the upside during London session, as you guys can see here. A big push up. How many pips is that? That's about, it touched 23.95. It's about 400 pips to the upside that gold has pushed. The reason why, because we've been on this downtrend here, and now it's just wiping out, sweeping all the liquidity, all the money from all the sellers. Now it's pushing price up. And also we have an imbalance here at 23.50. We have an imbalance. We have a 61.8 level as well. I took the Fibonacci from the high to low, and it gave me the 61.8 level at 23.50. So it's looking like it's heading towards that price. And it may retrace before the big push up. So I do see that with gold. With news coming out in 45 minutes, we may see a push down. And then up, and then down, and then up. The last prelim was May 10th. So we go back to May 10th. May 10th, we go back on what happened in the past, because history tends to repeat itself, right? So it's all pattern recognition. May 10th is right here. 7 a.m. That's when that was the last news for the prelim for this news. Last time was May 10th. Okay. Previous numbers came out to 3.5%. This one came out to 67.4. When news dropped, it gave me a bearish candle. I'm looking at the 1 hour. Give me a 1 hour bearish candle. You see how before news, price was trending up. London session, price was trending up. All the buyers came in. And then when news dropped, it came down. Came down to liquidate all these buyers. And eventually shot up. So it's similar to what's going to happen. I see a similar move happening. Okay. You see, before news, price was trending to the upside. And it's currently doing that. You see how it was trending up, and then it hit 23.75, and then it came down. I see a same move happening. You see right now it's trending up, and then it hit a point. Now it's like now it's pulling back down. You see how the similarity. See here, it was trending up, and then it's pulling back down. Let's look at the 15-minute. And we all know gold is going to hit 2,500. Overall, it's going to hit 2,500. That's going to be the next new all-time high. Gold will shoot up to 2,500. So right now, it's just positioning itself for that big buy to the upside. because there is a bullish move happening. Yeah, it's just a matter of time it's going to shoot. Yeah, it's just is looking for that support level, that strong support level before the buy up. Let me go back to May 10th. Okay, so we have May 10th here. Price was shooting up, London session, and then came down. News was at 7. This is news here back in May 10th. It gave me like a doji candle at the 15-minute and it pushed price down. Took some of the liquidity here from the buyers. See, actually came all the way down. After news, price shot down, and then it came up. Let me see how many pips is that. That's 400 pips that I dropped. So after news, it dropped 400 pips. Last time. This was last month, May 10th. After prelim news last month, after 7 a.m., price came down. Came down 400 pips, and then it shot up. So this could be the move here before the big buy up. Price may shoot down 400 pips, 300 pips, and we'll come down to a certain price level to where then here's where you buy and ride the wave to 2,500. Oh, wow. Look at this, guys. You see, after this news event, price came down 400 pips. And then this is when gold hit all-time high, 2450. This is the current all-time high right now, 2450. You see that? After news, price came down and it shot up to 2450. Currently, we're here. We're right here, and it's moving about the same. London session, price shot up. Now it's pulling back down, and it may pull back down even further. Because this is all money as well. This is all liquidity. All these buyers. This is all money from London session. Price may come down. $400 pips. Let's see how much is that. 3, 7. Let me see. 400 pips. 450 pips to 2290. We also have a strong support level at 2290 here. 2290, we have a strong support level. Why? Because look, we have price action here to the left. We have price action, we have support, price bounced off. And now it's looking like it's going to come down, liquidate all these buyers, and boom. You may see something like this. Price may shoot down 400 pips, 300 pips to 2290. It may liquidate. Give us a wick and then shoot up because we have money here. And this is where we see price going to 2,500. So right now, guys, I'm just analyzing and predicting what's going to happen after today, after news, and a potential setup for that big push up. Yeah, it's gonna, yeah, my gut is telling me the same. It's gonna push down because we have been trending. It's gonna push down, liquidate, because we have money here. We have money here. We have money here. We have money here. We have money up here. This imbalance is also liquidity. Right? All these sellers, this is imbalance. This is also liquidity. But before it goes up, it must come down before the big push up. And write this down, guys. Price, depending where price is currently at, it will liquidate the nearest liquidity. It will sweep the nearest liquidity. Depending where price is currently at, it will liquidate, it will sweep the nearest liquidity. Like this is the nearest liquidity here, is these buys here. So guess what's gonna happen? It's gonna come down, liquidate, come down, and then boom. So price tends to sweep the nearest liquidity. So look for the nearest liquidity, look for the nearest structure. Always go based off the previous structure. Now you see gold pushing down because we've been on a buy since last night. Okay, so don't become a cheap. Okay, all you cheaps here are positioning themselves right now. Okay, don't become a cheap. Right, don't become liquidity. Basically, that's what it means. Don't become liquidity. We have all these buyers that came in, all the masses came in and bought. They put in buy orders. We have all these stop losses here. And when news hit, institutions are going to come in and liquidate and take out all these buy orders. So do the opposite what the masses are doing. So now while we wait for news, okay, that's going to happen in 32 minutes. Let's go over market structure. Let's go over some basics here. Okay. Let's see. I also want to go over this here. I also want to show you guys this here. You guys see the pattern? Right now we're here in this green zone here. Okay. Look what happened in the past. We're in this green zone. It pushed up and now it's coming down. I feel like right now we're here. Right now we're here. And last time we're here. This was the last Fed news on May 1st. price shot down, and then shot up. So we could see price doing the same. It could shoot down, and then boom. You see here, price shot down, consolidated, shot down again, accumulation, and then shot up, and then broke structure. It hit all-time high, 2450, and then it pushed price down, consolidation, break a structure to the upside, and it came back down again. And then now, right now, we're seeing accumulation before the buy up. So we're gonna see one push, one more push to the downside before the buy up. So get ready, embrace yourselves for the big bull run. Okay, on gold. You guys see it? Let's go, Liana. I had a trade open for a buy overnight, woke up to massive profits. Let's go. My gut told me it was going to shoot up last night when I guess my gut and clicking out. I'm not now, but I guess shows the importance of sticking with what's best for you. Yep. It's a learning lesson, Stephanie. Let's go, Liana. Awesome. Let's see here. That's amazing. It's amazing to see that people are winning. Okay, so yeah, this is what I see. All right, this is after every Fed news we had the Fed news this Wednesday. Okay, they paused interest rate. They haven't changed it. Like it's been at the same numbers for over a year now. It's at 5.5, 5.25%. They haven't changed it. It's the same. They paused it. So that caused gold to push up, right? And then push down. It caused the dollar to drop, and it caused gold to raise price. So let's look at let me see the dollar. Dollar's shooting up as well. You see the dollar's shooting up, but gold is shooting down. Yeah, gold is shooting down right now, and then we see the dollar shooting up. See how it does the opposite? So gold, the dollar, and the gold, they do the opposite to each other. It's an inverse correlation. All right, so going back, let's talk about market structure here, price direction. I don't want to delete all of this. I'm actually gonna do something like this, actually. Okay, what are the three market phases? Let me know in the chat. Who knows the three market phases? Let's go, John. Let's go, Juvel. It's good that you guys are using your demo account. I love to see it. I love to see it. Stick with your demo, especially for my beginners. So we have the uptrend. We have downtrend. And we have consolidation. So uptrend, downtrend, consolidation. Uptrend is when you see higher highs, right? Higher highs, higher highs. Let me actually draw a better one. Uptrend. Uptrend, higher highs. Okay. You have higher highs here, 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 and then obviously here. When you guys see higher highs, you're currently on an uptrend. And then you would enter for the buy position here when it retests, right? But just looking at this won't be enough. Okay, you still need more confirmation before you take a buy. So for on an uptrend, you're looking for buys. Okay. And you're looking for higher highs and higher lows. These are higher highs because this high is higher than this previous high. So you're looking for higher highs and higher lows. Higher highs at the top, because I know some of you guys, I know some people, they get it mixed up, right? They get higher highs, no higher lows at the top and higher highs at the bottom. Or higher lows at the top and then lower lows at the bottom. Like, don't get it mixed up. Okay. It's simple. Higher high, higher high, higher high, higher high, and then higher low. On an uptrend, just think of high, right? Higher high. Uptrend is going up. And then when it pulls back, it's higher low because this low is higher than this previous low. So that is why it's called a higher low, because this low is higher than this previous low. So this is a higher low. And then this is a higher low. This is a higher low. Okay. So when you're seeing uptrend, you're looking for buy opportunities. And for that break of structure, that break and retest to the upside. Okay. Here, another position to buy. So you would look for a buy opportunity at higher lows before price shoots up. Okay. Here's another one. Okay. So when you guys see higher highs, it's currently on an uptrend. You see a higher high being created here, wait for that break of structure, wait for that new higher high being created, and expect a pullback to the downside, expect a pullback to the same area where the previous higher high was created, and look for the higher low. And here is where you enter the buy along with your other confirmations, and then write it up, right? You take the buy opportunity here, and then it pushes up. And then it breaks structure, it creates a new higher high, and then you expect another pullback because it has to create a higher low in the area where the higher high was created, okay? Previous high. So you would look for a buy here along with your other confirmations, and it pushed up, broke structure, it broke this previous high, it broke this high to create a new higher high, and it pushed price down because pullbacks are normal. You're going to expect a pullback, you're going to expect a retracement. So wait for the retracement to the downside to create a higher low. And typically the higher low is going to be in the same area where the previous high was created. Does that make sense? Do you guys see this? Drop a 1 in chat if you guys understand this. Let me know in the chat if you guys have any questions as well. But let me know in the chat. Drop a 1 if you guys got this down. Or if you guys need more explanation, let me know in the chat. So higher highs, you're looking for buys. You want to go with the trend. Okay. Go with the trend. Don't go against it. Buys only. Go with the trend. And to determine market direction, I like to use a 4-hour. Use 4-hour for market direction. Four-hour time frame. Okay. Now, when you see a downtrend, it looks something like this. Actually, I'm gonna draw it here. Okay. We see a downtrend, it looks something like this. I know it's not the prettiest, but I hope you guys can see this. So when you're looking at a downtrend, you're looking for lower lows and lower highs. Okay. What does that look like? Well, we had a higher high here. Okay, this is our last high, higher high. So when price fails to create a new higher high, you see how it didn't create a new higher high. Instead, it pushed price down and it created a lower high and a lower low. Create a lower high here and a lower low here because this price is lower than this previous price. Okay. All right, awesome. So when you see price, it doesn't continue, right? It doesn't continue to the upside. It fails to create a higher high. And instead, it pushes down and pushes up. And you see that price creates a lower price, right? It creates a lower high because this price is lower than this previous price. So whenever you see this, it's a shift of market direction. So now you're seeing a downtrend because there's a shift in price. Okay, now this is going to be a lower high. So for downtrend, don't label it as higher high or higher low, lower high. You know what I'm saying? Like, don't get it mixed up. Okay, just remember that. Downtrend, lower high, lower low. Think of it like, downtrend, low. Okay, it's lower high because it has to start with an L, right? LH, LL. LH, lower high, it goes at the top here. because it's a lower and it's a high, right? It's lower than this previous price, but it's a high. And then when it pulls back, right? Actually, here is a lower low. Okay. Here it's a lower low. And then price broke above this low, not above, but below. Price broke below this low, and it created a new lower low and a new lower high. Okay. Lower high, lower low. Okay. When you see price creating new lower lows and lower highs, okay, now it's a confirmation for a downtrend because I'm seeing price doing this. It's downtrending. It's lowering in price. Okay. So lower high, lower low, price pushes down, breaks the structure. Okay. This is a structure here. When you see price doing this, is breaking this lower low to create a new lower low. Expect a pullback to the upside because it has to create a lower high. Okay. And the lower high, typically it's around the same area as the previous lower low. So it's an area. Okay. It's not going to be an exact price. That's why you see me drawing my zones because it's an area of interest. Okay. It's not going to be an exact price that the lower high is going to hit because it's not going to be as perfect in the when on the live chart. It's not going to be perfect because you're going to see a lot of wicks, a lot of consolidation, and you're going to see different phases, market phases. So you're going to see something like this. It has to pull back, right? Every time there's a break of structure, there has to be a retest. It has to pull back in that same area where previously where price broke structure. It has to come back to retest in that same area, right, where the lower low was created or the higher low was created. Okay. Does that make sense? So expect a pullback because it has to create a new lower high before it continues to the downside. And then as you can see here, there's another break of structure. And this is the next lower high here. Because this price is lower than this previous price. This low is lower than this previous low. And this is a what? Lower low. Because this low is lower than this previous low. And then boom. Price broke below structure, came back to retest this lower low, the same area, before the continuation to the downside. So you look for a sell here. You look for a sell here and here. You look for sells at the lower highs before the push down, before the continuation to the downside. To look for sells here at the lower low because it's going to push up. It's going to pull back. It's going to retest. So wait for the break and retest. Wait for the retest, which is the lower high. Then price pushed down again, broke structure. You see how it came back to retest the same area. And this is where you'll look for a sell. Okay, wait for the lower high to be created. Okay. Just because you see this, it doesn't necessarily mean that it's good for a sell or good for a buy. You have to wait until it hits this area, and then along with your other confirmations, which is like the list that I gave you guys, the 8-step confirmation checklist, use that, right, to gather more confirmations. Wait for a confirmation pattern, or wait for a bearish candle to form here before you take a sell, right? Wait for a bearish candle to form before you take your sell. And then boom, that's a confirmation for a sell. Okay, alongside with your, with your scanners, with impulse or auras. If impulse is giving you a red arrow here, it's good for a sell. It's giving you a red arrow here. Boom, you take that sell. Okay, is this making sense? Drop a 111. You guys got this down? So this is a uptrend. This is a downtrend. Sells only. Go with the trend. Go against the trend. Go with the trend. Okay, go with the trend. Don't go against the trend. Don't be looking for buys during a downtrend because you're going against the trend. So don't look for buys. Don't enter positions at the lower low when on a pullback because you're going against the trend. So don't look for buys here, right? Because yes, you can catch a quick scalp move, at the lower lows here, quick 50 pip move, 60 pip move, whatever it is. Yes, you can capitalize, on the pullback, but it's a lot riskier because you're going against the trend. The momentum is towards the downside. So it's more riskier to trade against the trend. Okay. So if you guys want to get the most out of it and get a better percentage, then go with the trend, trade with the trend. Okay. Just keep that in mind. And then what's the next market phase? We have consolidation. When you see price doing something like this, price is consolidating, is building liquidity. Price is not creating higher highs or higher lows. It's just stagnant, staying stagnant. Okay. This is consolidation. You avoid this here. You don't trade during consolidation. You can still trade, right? But it is not ideal to trade during consolidation because you just never know where price is going to head, right? You want to wait for the next break of structure. Yes, you can catch some buys here, some sells here, buy sells, but it's building liquidity. Plus, you're becoming liquidity. You're becoming. You're part of the 95% of people. You don't want to be part of the 95% of traders. Okay. You want to do the opposite of what the masses are doing. Because guess what? Because when these institutions come in the market, these big banks, they're going to enter and they're going to liquidate all the buyers and sellers. There's going to be a liquidity sweep. You want to wait for the next break of structure.
How are you putting this thing on, bro?
Somebody say anything? If you guys have any questions, let me know in the chat or feel free to unmute yourself. But yeah, so wait for the next break of structure. Okay. Wait for the next break of structure. When there's a consolidation. Okay, don't trade during consolidation because you can be liquidated. It can do something like this. It can stop you out, and then it can create a trend. So don't become liquidity. Price can either do this and shoot up and then shoot down. And then it shoot up. It's all manipulation. Okay. So that is why it's ideal to wait for the break of structure so that way you know where the next trend is heading. You can do something like that. Or I can do something like this. Break and retest. Okay. You guys want to wait until a trend breaks out. Is this making sense? So here, do not trade during consolidation. Wait for the next break of structure. Wait for break structure. Either to the upside or downside. Wait for a trend, new trend. Do not trade during this phase. Wait for a break of structure, either to the upside or downside. Wait for a new trend. Okay, wait for a new trend to happen. Awesome. Now these are the 3 phases that are very like general and typical. Okay, you guys want to really study this. Okay. So we have the uptrend, look for higher highs, higher lows, downtrend, lower lows, lower highs, 4-hour time frame for market direction, consolidation, do not trade during this phase, wait for a break of structure, either to the upside or downside, wait for a new trend. Okay. Wait for either an uptrend or downtrend to be created after a consolidation. Okay. So if you guys got this down, let me know in the chat. Drop a 111 in chat if you guys got this down before we move on. We have news in 4 minutes. Also, you guys want to take a picture of this, make it real quick. I know you guys, some of you guys are taking notes, so take a picture of this. You guys haven't gotten it down already. Take a picture. 3, 2, 1. All right, cool. Okay, let me see here. We have news in 3 minutes. Price is pulling down. So where are we in the market phase right now? I'm looking at the 4-hour. Are we on a downtrend or are we on an uptrend? Let me know. Are we in an uptrend or are we in a downtrend? Are we seeing lower lows, lower highs, or are we seeing higher highs and higher lows? Down. Yep. We are in the downtrend because we have a lower low here, a lower high, I'm sorry, lower high. We had a higher high here. This is a higher high. This is a lower high, lower low. And then we have a lower low here. Lower lows and lower highs can also be liquidity. High highs and high lows can also be liquidity. Okay. Just so you guys know. You may see a lower low being created, a lower high being created here. We already have one here, right? This is a lower high. Okay. So price right now is reacting to this lower high here. You see how it wicked? Now it's pushing down. So when we see price creating higher highs and higher lows, then there's a shift of market direction. But right now it's still, we're still in a downtrend because price hasn't broken any of these structures, right? It hasn't broken this lower high, it hasn't broken this lower high. It just whipped, but it never broke above it, right? It never broke above this price, 23.40. It failed to create a lower low here. It failed to create a lower low. Instead, it created a higher low. Okay. It created a higher low here because this low is higher than this previous low. So this is a higher low. Okay. So we're still, price may shoot up and create a new higher high here. When we see something like this, then there is a shift of market direction. Now we're experiencing an uptrend. And it may push up to this level here, 24.50, and create a new higher high. Okay, that's where we're going to experience that big push to the upside, gold 2500. Okay, so here, let's go to the 1 hour. So these just hit. It's giving me a bullish candle. See price consolidating here. Price is slowing down. London session, it was on an uptrend. You see that? And then it stopped. It failed to create a higher high. Now it's consolidating. And it may push down because the overall momentum, you see, we're on a downtrend. So price may push down to liquidate all these buyers before the big move up. Yeah, current price is in a bit of, yep, it is consolidating right now. We see price consolidating right now. Price is currently here. You see this consolidation here? You see it? Price fell to create a higher high. It's going sideways. Okay. Wait for that break of structure. See, price was trending to the upside. See how it's creating higher highs and higher lows. And then now it's consolidating. Wait for the break of structure, either to the upside or to the downside. Now, this is leading to our next topic, which is support and resistance zone, right? So this is for gold, especially for gold. It respects key levels, psychological numbers, these whole numbers. So every $5 to $10, right? Because 1 ounce of gold is equal to 2,000 right now, $2,230, right? That's the current price right now for physical gold. Okay. Every time price changes when price fluctuates. Okay, if it goes up by $1, okay, $1 equals to 10 pips for gold. $1 equals to 10 pips. So every time price, it either increases or decreases by $1, it's increasing or decreasing by 10 pips. So we see here, we have our key level at 23.30, right? And it went down to 23.29. That's right. That's $1 difference. And that's also that it equals to 10 pips. Okay. 10 pips that price pushed down. Now you see that it went from 23.29 to 23.30 now. Okay. It went up by $1. That equals to 10 pips because $1 equals to 10 pips. Now, when you see price going from 23.31 to 23.35, that's 40 pips because that's $4, right? 23.31, 23.35, that's $4, okay, which equals to 40 pips because each dollar equals to 10 pips. So $4 equals to 40 pips. Does that make sense? Let me know in the chat if that makes sense. Okay. And this is for gold only. And gold respects these key levels every $10, every $5. Okay. So from 2030 to 2035, that's $5 in total. That equals to 50 pips. Okay. Now you can use these whole numbers as support and resistance zones, as well as your entry points. Okay. Your potential entry, your potential take profits, your potential stop loss. You can use these key levels for that. Okay. It depends where you're taking the trade. Okay. Where price is currently at. Now that we see that price is currently consolidating, we're looking for that next break of structure. Okay. See, it's consolidating right now. Wait for that break of structure to the upside or to the downside. Look at the 15-minute. Now, what happened here? What happened here? What do we see? What do we see here? Let me know in the chat. What do we see here? What is this? Is it a support or resistance? Let me know. See price pushing up. Sheesh.
Resistance.
It's a resistance, right? Why is it a resistance?
It didn't break that level. It went up and tried to break, but it came back down.
Exactly. So when you see price doing this, it hit a resistance level. When you see a bullish candle following with a bearish candle and it's pushing price down, it failed to create a higher high. And that's when you know it's a resistance because it failed to create a higher high. Okay. Instead, it hit this level. It gave me this wick and it reversed. Okay. It went on the pullback. Now, when you see this happening, it's a resistance. Okay. Now I would mark up there at 23.35. And it's crazy that it hit a resistance level there because we know that here it's a key level, 22.35, right? It's a zone. It hit the zone here. That's why I like trading gold because it respects these price levels. It respects price so well. Look what happened here. It respected this resistance because when you look back, we have price action going on. We change this to 22.36, 34. Make this blue. Okay. Look left. What do we have here? We have price action. Okay. Look left. to be right. Okay, we have this is a lower high, the 4-hour lower high. You see that when we look at the bigger picture, we have the lower high there. Okay, we have a lower high, and price reacted at that level because we have a lower high there. We have liquidity there. Okay, we have price action, so that's why price reacted. It gave me that wick, and it pushed down. Okay. Now, let's see here. Okay. Okay, now that I have my resistance there, where's my support? 23,
Where
25.
those wicks at? The multiple touches where the wicks are.
Yeah, this is a good, looking at the 15-minute, we do have a support level here, but that's out of my my zone, right? I want to wait until it hits 23.25 because it also gave me that wick at 23.25. Let's see here. Where price is currently here. I want to wait until price pushes here. 23.25, 23.26, 54. There. You see here, price broke above structure. We had some resistance here. Price broke above, retest, and then it broke above this structure and retest, create a higher high, came to retest again this level, and then push up. That's a good support level. And also, what do you guys see here? You look left. What do you guys see? Look at this. You have price action. See that? Price broke above, came back down to retest this resistance. This used to be resistance here. So resistance became a support. When you see resistance becoming a support, and it's on an uptrend, right? It's creating an uptrend, and it's also following market structure. When you see resistance becoming a support, price is pushing up. When you see support becoming a resistance, price is pushing down. Is that making sense? So you guys want to look what happened in the past. What happened here? We have price action here. We have price action here. You see how it's respecting these levels? We have price action here. And look, price broke above, created this resistance here, and it came back down because it has to pull back. Every time there's a break of structure, it has to come back that zone to the previous resistance here, and it created a support. Resistance became a support. You guys see that? I hope you guys are seeing this with me. So yes, you could have caught the buy here, but I'm still in consolidation. I want to wait for a trend. I want to wait for the next break of structure. Because yes, you could have caught the buy here, but you only collected what? How much is that? Yeah, that's 100 pips. That's really good. 100 pips. That's a no-brainer, right? But this is the power of trading gold. That's why I like trading gold, because you can catch big pips. You catch 100 pips easily, 150 pips. I call out 100 pips, 150 pips a day, guys. Right? So gold be moving. When she pushes, she pushes. But you can use these key levels as an advantage. Right? You could have got the buy here, boom. That's 100 pips from zone to zone. I trade from zone to zone. Push up, wait for the retest, push down, and then you could cut the buy there, boom. Now, when you see this, something like this, that's a good confirmation. You see this wick, you see how it wick touched, and boom, that's a sniper move right there. Going back to the 5 minute. Oh my God, I'm not making this up. Look at this confirmation candle. Look at this. This is a doji candle. Look at that. When you see something like this, that's a confirmation for a buy. And this happened 30 minutes ago. We missed it, but it's okay. You know, I was teaching you guys the market phases when this happened. But look, there's always another opportunity. When you guys see something like this, that's a confirmation for a buy. Because that's a what is this called? That's a dragonfly doji. Yeah, it's like a dragonfly doji.
Yeah, it is.
Um, yeah, yeah, because that it gave me that huge wick. So this is a single candle pattern. It's called a dragonfly doji. When I see two bearish candles, right, two bearish candles, and I see this wick here, this doji, following two bullish candles, yep, that is called a dragonfly doji, right? This is a, yeah, this is a dragonfly doji. Whenever you guys see this, right, you see two bearish candles and then following with a doji, and then after the doji, it gives you two bullish candles. That's a confirmation for a buy. Okay, that's a confirmation for a buy. So you could have got the bot buy there. That's a sniper entry at the zone. When it touched, it touched within my zone. Like it's crazy how it worked out. Could have got the buy there. Boom, to the buy. Now that we know that price is here, okay, maybe it will come back to retest the zone again. We'll see. I don't want to take any trades right now because it's consolidating. I prefer for price to break structure, retest. Okay, I'm waiting for the next trend. We were on a buy trend. We were on a buy. London session, we're all buys. You see, the price was trending. Okay, now it hit, this morning, it hit this resistance and it failed to create a higher high. Now it's consolidating. Okay. But yeah, with news, it wasn't, like I said, it's a mild impact. So it wasn't big at all. It's not a big event. It's just a survey that they do. And it resulted this bearish candle here, right? It really didn't create no type of movement. It stayed in consolidation mode. So news this morning was weak. So yeah, right now we're still in consolidation phase. I'm waiting for the break of structure. Okay. Yes, we had an opportunity to take the buy here, at 6:30, 30 minutes after I started my call. This move happened, but I was teaching when it happened, but it's okay, It's good that, it played out. I'd rather miss a trade than lose a trade. I'd rather miss a trade, and I'd rather miss, on a move than taking a trade out of rush and out of fear of missing out, out of greed. I'd rather miss a trade than take a trade and not following my trading plan. I'd rather have that happen, right? I'd rather miss a trade than rush into one and not following my trading plan and end up losing it. There's always gonna be another opportunity. Always. So don't feel like you're missing out. Just be patient and wait for the next break of structure. You see now price is pushing up to the resistance zone. We'll see how price will react. Will it create another resistance or will it touch again, respect this area and push down? Or will it break structure? Will it respect this area and push down? Or will it break structure, retest, and boom, catch a buy there? And remember, guys, we do have a imbalance at 2350 area. So we may see price pushing to the upside to fill this gap here. Okay. So it all depends what we see price doing. Keep in mind that we also have liquidity here from all these buyers, so price could also push down. This game is all about probabilities. You want to gather as much probabilities. Okay. You guys want to see the possibilities of what price will do. Okay, price can go either way. I don't have control of the markets. I can only control my emotions. I can only control how I feel, my thoughts, how I respond. I have no control of what will happen after I put in that order, after I put in that buy or that sell. There's no guarantee that you're gonna make your money back. There's no guarantee that you're gonna make money. Okay, in trading, period. There's no guarantee. It's not a guarantee that you're gonna, hitting 6 figures this year, 7 figures. Whatever goal that you have in mind is not guaranteed. Just keep that in mind, right? But as long as you're following your trading plan, as long as you're following your plan, you stay consistent with it and disciplined with it, then it's possible. But if you set a goal, okay, we all want to make 6 figures. We all want to make 7 figures, right? We all have these goals, but it's not going to play itself out. You won't succeed unless you have a plan. You have a plan in place. Okay, what's your trading plan? Having a stop loss is part of your trading plan. You don't have a stop loss, you trade without a stop loss, you're not going to succeed long term as a trader. Period. You trade without stop loss, you're not going to succeed. Because that's basic. That's basic risk management right there. Okay. So having a stop loss is part of your trading plan. Waiting for that break of structure and retest, that's part of your trading plan. Waiting for those confirmation candles, that's part of your trading plan. If you're just trading just to get the bag and be out, you're not going to succeed. You're in it for the money and you're going to leave for the money. You're in it for the money and you're going to leave with the money. But for those that they stay to build a legacy. And they stay to pass this information forward, to pass the skill set to their kids or their kids' kids. That's where I see myself going. That's where I see everybody going. Okay, so be in it because of the skill. Be in it because of what this can do for you and your family. Don't just be in it for the money, for the greed, and don't treat this like gambling, like it's a casino. Like, no, it's a different ball game. So just giving you guys a perspective here. As we wait here for the break of structure. And right now, guys, today was just, was teaching mode, going over the market phases, support and resistance, looking what price is doing right now. So, like I said, trading comes with a lot of patience. You have to be patient. You have to look at the chart. You gotta read the candles. You gotta entertain yourself somehow with trading. I'm not calling out any trades right now unless it breaks structure. But like I said, wait for that break of structure, either to the upside or the downside. Keep in mind that we do have liquidity here, so we could see a push down to liquidate this area, or it could push price up and fill the imbalance. Because this is also retracement. It could break structure above, boom, and then retrace, and then liquidate all these buyers. Or it could go ahead and break the structure below and liquidate. But I do see price going down to 22.90 because we do have a strong support level there. We do have liquidity here. We do have liquidity here. So we could see a big push down to the zone before the buy up. Boom, boom. This is the bigger picture here. You guys want to look at the bigger picture. But do you guys have any questions about support resistance? Just remember that resistance is your supply. Support is your demand. Resistance is supply. Support is your demand. Why is that, Carlos? Because when you supply, you're selling something. You're selling. You're giving out. You're supplying something. You're selling something. So think of it that way. When it hits my resistance, okay, resistance means supply. Supply, you're selling. Guess what happened? It pushed price down. It's selling. People are cashing out. People are withdrawing. That's why it sells. Sellers are dominating the market. Okay, so this is my resistance. Your demand is your support. Support are buyers. They're demanding something. They want to buy, right? Buyers are coming in. So that's pushing price up. Okay, that's your demand. When you see price pushing up, okay, that's a support zone because there's buyers coming in. There's demand coming. Okay, supply is my resistance. There's sellers in the market. I'm selling. Does that make sense? Drop a 222 if that makes sense. So that's the easiest way to remember it. Support and resistance, supply, demand. Okay. And everything is key level. So resistance can also become a support. Resistance can become support. Support can become resistance. It goes hand in hand. It goes hand in hand. So when you see a next break of structure, this resistance can become a support because buyers can come in. When it breaks above structure, it can create a new resistance here at this key level at 2340 and push price down. And this could be my new support at 2235. Why? Because we had a previous resistance here that broke structure, became support, and then I'm waiting for my confirmation candle, waiting for that bullish candle before I take the buy and write it up. So whenever there's a break of structure, wait for that new resistance to be formed. When you see a bearish candle forming here, that's the new resistance. Oops, let me change this to red. Okay. When you see price pushing up, breaking structure, wait for the new resistance to be formed, right? When you see a bearish candle forming at this key level, at the next key level, 2340, okay, that's my resistance. That's my new resistance. Now I'm going to wait for the pullback. Wait for the retest back to my previous zone because I know that there is price action here. Okay, there's price action here. Price has to come back down to retest. And then I'll wait for my confirmation candle, right? The bullish candle here. before I take the buy. And then, boom. Are you guys seeing this? And you guys can use 2340 as TP1, 2345 TP2. Every $5, every $10, you guys can use these key levels as well as for take profits or exit zones, exits. You guys can use it as a stop loss or as entry. Okay. I trade from zone to zone. That's all I do. Zone to zone. So you see how price reacted to that zone. It gave me that wick. It never broke above structure. It respected that zone. You see this wick? It respected that zone. It just touched that zone and came down, and it closed below structure. It closed below my zone. So this is not a break of structure. It just wicked and then came down. This is all liquidity. When you guys see these wicks, it's all liquidity. It's all money. It's all money. Price came up, liquidated these sellers, and now there's still money left over here. There's money here. We also have money here. You see that price came up to liquidate here. Liquidity sweep. Boom. Came down. You guys want to pay attention to these moves. This liquidity. This when you guys see wicks, it's all liquidity. Okay. It's all money. But price never it failed to break above structure. It's still in between my zones. Okay. I'm still waiting. I'm being patient. I'm being patient for that break of structure. And since it's Friday, it's Friday morning, it's it's a weekend. Price is gonna move slow. After news, we only have one news event. It's really not that much activity going on. So yeah, it's gonna move slow. Right now, it's just consolidating. We had a lot of action, a lot of activity this week with Fed rate, with CPI, unemployment claims, PPI. It really moved the market a lot. So wait for the next break of structure. Be patient. Study these candles, study these patterns. This is my hourly time frame. You see right now the hourly is just going back and forth sideways. You see that? This is a bullish trend. You see that we have 1, 2, 3, 4, 5, 6 hours of price trending to the upside. 6 hours. So since last night, price has been trending upside. Actually, it started from here. So we have more bullish candles than bearish candles. That's how you know that it's been on an uptrend. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 16, 17, 18, 20 hours. 20 hours. So since Thursday morning, we've been on this uptrend move here. Since Thursday morning. Price came down to 2,300 area and then pushed price up. That's all the buyers that came in. And currently we're here. It's consolidation phase. Waiting for the next break of structure. We do have money here. So yeah, guys. If you guys got some value, drop a fire emoji in the chat box. You guys got some value today. Today was more of teaching, more of going over just basic information like market phase, support resistance. But let me know in the chat. You guys got some value. Drop a fire emoji in the chat. Let me know. But hopefully you guys got some value. Hopefully this makes sense. Just put in the reps, put in the practice, train your eyes to recognize these patterns and be patient, trust the process and, keep showing up, And that's all I can say. Success is not, complicated. It's very simple. It's just a series of habits, We're habitual human beings and we operate by habit, and success is just doing the same thing every single day, doing the same thing in a certain way every single day. Okay, that's the only difference between successful and unsuccessful people. That successful people do things differently. They do things in a certain way that most people don't do. And that's simply just showing up for yourself, putting in the work, putting in that sacrifice, that pain, that time, energy, and effort into really sharpening your craft, sharpening your axe, and training your eyes, recognizing these patterns. But yeah, guys, just stay focused, and wait for that next break of structure. Let's see here. Friday level. Yeah, Fridays are usually like slow days. It depends like on news and everything, but it's typically slow. So like I'm gonna use Friday to like really teach and then give you guys like some general, some basics of trading, some fundamentals. Nothing. Okay. Yeah, I hope you guys have a blessed weekend. Thank you so much for hopping on. I'll see you guys Tuesday morning. Enjoy your weekend. Be safe out there. Study more than you trade. Take this weekend to backtest, to trade, to backtest, to train, to train your eyes, to really, recognize these patterns and do some reflection. Do some reflection of what did you do well this week, what didn't you do well this week, and what improvements you're going to make moving forward. Okay, be honest with yourself. I'm going to do a self-reflection this weekend. Like I'm going to reflect on what I could have done better this week. Not just in training, but every area of your life, financially, spiritually, emotionally, financially, physically, mentally. I like to ask myself 3 questions. What did I do well this week? What I didn't, that's the first question. What did I do well? Okay, give yourself credit, give yourself grace. So what are the things that you did well? It can be little things, right? Like spending time with your family, you know, uh, washing your car. I don't know, like something, like give yourself credit, right? Like give yourself grace for something that you're doing. And then the second question is, what didn't you do well? Okay, be honest with yourself, be transparent. Like, okay, these are the areas I need to improve on. Okay, I slacked off on this area. I didn't wake up on time. Okay, next week I'm gonna make it a goal to wake up on time. Or this week I didn't trade. Okay, I'm gonna make it a goal this week to trade. And I'm gonna pay myself. Oh, I didn't spend as much time with my family. Okay, I'm gonna make it a goal this week to spend and be present with my family. Okay, and make sure I be there with them. All right. So be honest with yourself, because that's the only way to learn. Okay. Oh, I didn't set up a stop loss. Okay, this week I'm gonna make sure I follow my training plan. I'm gonna set up a stop loss. I'm gonna follow my confirmations, and things will be different now. Okay. I had to tell myself that, and it gave me the biggest breakthrough, because I came to realize that, yo, these are the areas I need to improve on in my trading or in my business. The third question is, what improvements am I going to make moving forward? So really, those improvements are from the stuff that you didn't do well. You didn't use a stop loss, or you didn't follow your confirmations. Okay, those are the areas I'm going to improve on. I'm going to improve on following my confirmation checklist. I'm going to improve on, waking up on time in the morning. I'm going to set up an alarm. I'm not gonna press the snooze button. I'm going to wake up on time. Okay. So ever since I started these calls, man, I've been just waking up early. Like it's a habit now. Waking up at 5:30. Like it's a habit, you know, because I get to be on these calls, I get to be on these calls, and we get to be on these calls. So really holding yourself accountable and having a daily routine, it's really key. So this weekend, take time to reflect. Okay. I really challenge you guys to really reflect. I do it on a weekly basis. I reflect every Sunday on a weekly basis, and I go back on what I could have done better, so that every week can be a better week, and that will compound over time. You have a good day. Okay. You accomplish your goals, you do your task within that day. Okay. You do it for 7 days straight, that makes it a good week. Those weeks can turn into a good month. You have 4 good weeks, you have a good month. You have 12 good months following your routine, then you have a good year. Okay, so it compounds over time, brick by brick. So again, guys, I appreciate you guys. Have a blessed weekend. I'll see you guys Tuesday morning. Let's run this up. Go out there, make it happen, and I'll see you guys on Tuesday. Let's go. Peace.